Happy Tuesday. How you doing out there? Hope you're having a great day here so far. This is a quick show that we do called The Closing Beat. It's a stock market update show where we go over the good, the bad, and the ugly for the market. We're financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com, and I hope you'll check us out on Thursday. So every Thursday we do classes for customers. I'm sort of working on a big year-end kind of class for them, and so I need an extra week. And I thought, well, this week we're going to do a class and we'll make it public for everybody. So if you want to come join, it'll just be live on our YouTube channel here. Our customers can also view it in the dojo if they would like to. But we're going to cover market decline statistics. We did this class back in June. It was a really good class. Lots of geeky stuff in there, all condensed into like 7 different little presentation slides for you. So if you're interested, it'll be Thursday at 8 p.m. Eastern live here on YouTube and, of course, in the dojo for our customers. Like I said, we do a class every Thursday. We like to teach. Every weekend I send out an email to clients as well. And so, you know, just a way to kind of keep teaching how things work rather than be the typical advisor that just, invest your money and, you know, whatever they do. I don't know. So that's that one. We're also playing a game. It's called Guess the Dow, jazzwealth.com/Guess the Dow. Free guess, no strings attached. Just tell me where you think the Dow is going to close next week. And if you're the closest without going over, we'll send you a $100 gift card. If you're one of our customers, we will, of course, credit your account $100, or you can have the gift card. If you'd prefer to have the gift card, that's cool too. You have the option of choosing that in there. Well, let's go over the stock market here today because you got a whole lot of nothing. Well, this one doesn't need to take very long. I've actually got some interesting stats and maybe something interesting to talk about gold and silver here. Maybe help you out with some, lesson of the day. A couple lessons of the day. Why not? Let's do it here. So you got the Dow lower by 27. You got the S&P down 3, 5 on the NASDAQ. Really sort of a ho-hum, float around kind of day. The Fed tomorrow, right? So everybody's looking, was there any trade news today? Not really, so they go to the Fed tomorrow. Here's the stock market sitting near highs. Like we said yesterday, we need a catalyst. Give us something to get us excited to continue to buy this market. You don't have it. So you have retail investors, institutional investors, largely just willing to sit back and wait for the Fed. So the S&P pretty much flat on the day. Most people would say that's a flat day. The NASDAQ, basically the same thing, right there sitting close to highs, ready to make new highs, but as of now, nothing there. And the Dow looking like the same thing if you see it on your charts there. Overnight, the China Post said, look, there's not going to be a trade deal before the deadline, December 15th, before the new tariffs go into place, or increased tariffs, 156 billion or something like that. And so the China Post said, nope, they're not going to have a deal before that deadline hits, which is Sunday, I believe. At this point. Then there was a report today that said that the tariffs were actually going to be delayed because they're working on a deal. Larry Kudlow, the economic advisor for the White House, came out and said, nope, I don't know anything of that. So, all right, tariffs back on there. And so everybody's like, oh, okay, forget it, right? Let's just wait for the Fed. The trade stuff is confusing right now. Investors were like, I'm not going to do anything. I'll wait for the Fed tomorrow. And so we do have the Fed tomorrow. I will cover some interesting stats here for you in just a little bit about the Fed, things you may want to know going into the Fed announcement tomorrow afternoon, 2 o'clock. So, of course, we'll cover that as well. That's basically it for the markets today. Let's go over to our sector breakdown here. Different sectors of the market. Semiconductors sitting near highs there, just itching to break to new highs as well. Sort of condensed, choppy pattern near highs there. Not much you can do with it, but looking strong in the meantime. If you own it, it's one of those areas of the market where you don't have a good reason to sell it. There hasn't been any significant pullback. There's been no fear. Right now, everything's sort of in limbo. So semiconductors sitting near highs, looking pretty good. Oil continuing to just kind of grind higher along this uptrend here. It's not pretty, but if we took a little line here, just kind of drew like a little simple uptrend. You've got this sort of path going right here, very clean and clear. We haven't been outside of it. We haven't been above it. We haven't been below it. We're just chopping around there, moving higher ever so slowly. I think a lot of people would be okay with that, as there's a lot of oil and energy type investors out there that have been taking a shot at a bottom. Who could blame you, huh? Take a little shot at the bottom there. If we go to, I'm not telling you to take a shot at the bottom. I guess I should say that clearly so the closed captioning service realizes that it wasn't a suggestion, huh? He's getting smart, man. 37 years old. He gets smarter every day. Regional banks sitting here near highs, hinting at a breakout. Now, not only here in this short term of a little bit of a breakout, but you've also got a breakout of these prior highs. So I can't get it to stick for some reason, but so right here, everybody watching this area here, because of that, as you approach those highs, the volume is a little bit lower. People kind of want to sit back and wait and see what happens. That's like jumping into a big pond or something. You're going to want somebody else to do it first, make sure they come up, they're breathing, everything looks good. All right, I'll jump into the pond too. And so that's why you have a lack of participation here at highs, but regional banks looking pretty good, sitting at those highs as well. Speaking of sitting at highs, you got retail stocks also sitting at highs. It's a risk to reward issue here for short-term traders, and so the sector really not able to do anything. You also have some mixed news kind of in the retail space, and everybody kind of waiting on the holiday holiday reports, right, to see what did companies do. Do we have a good holiday season or not? Not really a sector, but if we look over to Mexico real quick, got a strong move in Mexico, up 1.7%. The EWW is the Mexican ETF. If you want to play over there, sort of the large cap names in Mexico, or if you're just saying, well, how do I invest in Mexico? This might be a place you start to look and see if this sort of ETF fits you. Back above the 200-day moving average today, and that's all because of the USMCA deal officially coming out. Hasn't really been one of the market-moving type headlines here in the U.S., but for Mexico, that was good news. So up 1.7% on the day. Gold and silver, that's where we're going to focus here for a second. You got gold just a little tick higher on the day, not too big of a deal, and you got silver right up off the lows, just trying to hint there. Here's the deal. I was talking to a customer who has been investing purely in gold and silver since before I was born, 1980 to be exact. And this person essentially bet their life that there was going to be some sort of catastrophe, some sort of chaos throughout, and they just never saw it. And so now they're way behind, and I thought, well, that might be a good lesson for everybody here. So I'm going to pull up a different chart for you. What I did is I put gold and silver, the price in dollar terms, going back to 1980, just a touch before 1980, to show you the overall performance of gold and silver. So we have them sort of, this is the percentage return here. Since 1980, 545%, 188% in the price of silver. What I want you to focus on is up here in the middle. Yeah, you can see the mouse. Annualized returns for the last 40 years, 4.66% annualized returns. You got 2.61% in the price of silver. This is important because if I were to just for fun overlay the S&P 500 here, you would see a dramatic difference in performance. If we were to overlay, say, the NASDAQ as well, you would see a dramatic change in performance. Annualized returns, 10% on the NASDAQ, 9.85% on the S&P, which, by the way, that is the historical return of the S&P 500. I believe it's 9.91% all time. So that's why people say 10% before inflation, 7% after inflation. Well, talking about inflation brings up a good point. While you're investing in gold and silver back here and getting these really, really low returns, for the most part, there are moments in time, of course, where it had nice little stretches of gains there. But over the long run, people that bet their lives on gold and silver because of believing in some major catastrophe, you have to do some things a little differently. Nothing wrong with it. I mean, if you want to do that, there's nothing wrong with that. But, you know, those people tend to believe that inflation's about to go crazy and everything. And actually, if I overlay inflation in this as well, inflation has been downtrending while over this same time period, really over almost every time period. If you look at inflation up here at the top, you can see just annualized averaging a downtrend there, and it's hard to tell on the charts. That's the light blue line there down at the bottom, but inflation creeping lower. Now, I get the argument. I understand why people say, I'm investing in gold, global chaos, meltdowns and all this stuff. But if you're going to do that, we have to do something else, right? If you're going to invest in purely gold, you know now that it's a slow and steady investment. It's not a bad investment, just a slow and steady investment. And so if you're going to do something like that, you can't go use the calculators that say, if I invest for 40 years and I put so much money away, how much will I have in the future? Because a lot of them are using the S&P. They're using 7% after inflation returns. And so what happens is you think you're going to be fine. 40 years later, unfortunately, like this gentleman, he gets to retirement now and realizes, I don't have enough money. My money didn't grow enough. So I highly, highly, highly suggest that if you are of the belief that, hey, you know, things are going to get a little chaotic, maybe a U.S. reset or a global reset, financial currencies and all that have to be backed by gold now, and I totally get all the arguments there. But if you're going to do that, you have to make your calculations on a lower projected return. I suggest 3%. right? So that way you know, if I'm going to take this assumption, I have to save many, many more dollars to make up for the difference in the lack of returns that I'm not going to get. So just wanted to point that out. I didn't mean to go crazy on you there, but we can pretty much pull up any data we're looking for. So I wanted to share that with you just so you know, because I know there's a lot of people out there that think like that and believe things are about to happen. All right, let's go on to some individual stocks here, and then we'll get to Fed news. Agilent, interesting sort of wider sloppy cup and handle pattern for my old school technical traders out there. Broke out to new highs today, breaking that top end. Pershing Square, which is Bill Ackman's fund there, apparently has taken a 223,000 share stake. He's already done that, but that obviously became news today or last night because of the SEC filing. So that stock was a little bit higher today. AutoZone happens to be a stock that we own here at Jazz Wealth. Fresh breakout to new highs there. Stock was up 7%. On the day. The growth was on the commercial side. So when they reported earnings last quarter, we talked about their earnings growth and how they were going to focus more on the commercial, like repair shops and dealerships and things like that. So they have two parts to their business, well, three really, but they've got two main parts to their business. You walk into the store, you buy a battery, you change your battery, or you buy an alternator or something, you're a DIY guy, you get in there and get dirty and change your stuff, right? Then they have the other part of their business, which they're really trying to grow, which is where dealerships and like repair shops go to AutoZone, get a little discount, and buy their parts and stuff from them. Well, that's actually going really well. So AutoZone reporting their earnings did well. They beat on earnings by 56 cents. Revenue's better than expected. Everything's really good there. And analysts, by the way, they're focused on that commercial side of the business as well. Have a lot of positive things to say about AutoZone as far as how they're growing their business. Not the same for some of the other names. Now, you had Advanced Auto Parts was higher on the day in sympathy with that, but definitely not the same performing type stock. They just don't compete. They do compete, but they don't compete to the same level that AutoZone does on the commercial side. That could change, but for now, there's your report on AutoZone. All right, Netflix, I think, was a little lower today. Needham, it's a company, we get their analyst reports here, very negative on Netflix today. Needham said that they're going to be losing about 4 million of their premium subscribers. That's their prediction anyways, and just in competition, everything else that's going on out there, they were saying people will most likely move to a lower price service as some of these services start to look very, very similar to each other. And so Netflix a little bit lower on the day. Chewy.com. Nice reversal from yesterday, trying to come off lows there, up 5% on the day. They missed on earnings. Revenues were better than expected. They raised guidance and very positive about if there's a recession. They've already stress tested their business model and are prepared for how they're going to adjust. They're actually quite bullish that people will not scale back, which, yeah, they probably have to say that, right? But they're not so bearish on the idea that people will scale back spending on their pets. I think there'll be a little pullback there, but for the most part, people will continue to spend on their pets. It's like $72 billion a year or some ridiculous number. That's crazy. I don't know. Where do you land? You one of those people? Will you spend top dollar on the old pet there? Your snakes and rabbits and whatever you guys have? All right, Toll Brothers, unfortunately, this is one we own as well. So back down to these lows. It hasn't done a whole lot lately. Down about 5% on the day. They're having some pricing and margin issues here. Toll Brothers is toward, if they're in your area, you probably know, they're towards the higher end of some of the other home builders out there. Average home tends to be, sales price tends to be around $862,000. But what's happened is here over the last quarter, that's been compressed back to between $800,000 and $820,000. So it's a little bit of a ding in the short term, which also hurts their overall profit margin. So Toll Brothers being on the higher end, they expect and they think that this is the sort of end of that little compression that they've experienced there. And, you know, they have some good arguments with the Fed keeping rates low and everything. So we'll see. For now, just a little pullback in terms of how volatile it's been lately. Down about 5%. All right, what else do we have here? Cover a few other stocks that we own just so you guys know if you're one of our customers. Santa Fe. I actually don't know if you say Santa Fe or Santa Fe, but that stock was at new highs today, looking really good. They have some great data on a phase 3 trial for patients with, I can't remember the disease they're working on. I can't remember what they're working on. Anyways, they're so good results from phase 3 trials. Any biotech stock that has that sort of thing is going to get a little bit of a pop because by phase 3, you've obviously invested a lot of money. You want to see that that's successful, and it was for them. They did really well. They're also going to start focusing away from diabetes now that this drug is starting to show real potential there. Apologies for not knowing which one it was. I can't remember. It's got a weird name to it. My wife, we talked about it and everything. Alglutenin or something like that. I can't remember. It's good. She read through everything, and that's her thing, so I'm happy with that. All right, let's go over to some individual, let's go over the market performance here. 67% of stocks are above the 50-day moving average, just a small downtick from yesterday. We were at 69% yesterday, had 23 new 52-week highs today. 16% of the 52-week highs are within 2% of hitting new 52-week highs, and 1/4 of the S&P 500 is within 3% of hitting new 52-week highs. So we got a large chunk of stocks out there ready to show up on that list, but today just wasn't the day for that. A couple notable names there. FMC, we hinted at this maybe being a breakout there. It also hinted at it again today. Not getting any love there from FMC. Maybe needs a little bit more time to consolidate in that range there. I thought PNC Bank was interesting. That moved to new highs today and stayed towards the upper end of that range, looking good. BMY, which is one that we happen to own here, really good day today, maybe a little bit overdone in the short term. If that one fell for a while, I think it'd be totally okay. We'll see. So far, it's just blasting ahead. Then there was AES. This is a utility company breaking to highs there as well. It's kind of a standout in the utility space today if you happen to be looking. Two new lows to the downside. Occidental Petroleum again, although it closed off of the lows. And then you had Ventas, VTR as a ticker symbol, continuing its sort of waterfall drop there in the short term. All right, so that's about it that I have for stocks. Tomorrow you got American Eagle reporting earnings, Children's Place reporting earnings, Lululemon reporting earnings as well. So that'll be something that we can look at tomorrow. You've also got the Fed. Here's the news on the Fed. They have had 3 rate cuts in a row. Well, they did 3 rate cuts in a row, and tomorrow it is largely expected that they are not going to hike rates. If you want to know the exact stats, 97.8% chance that they are not going to change rates at all, and they've been pretty quiet on that, so chances are that's what's going to happen. There's still a 2.2% chance that they're going to raise rates by a 1/4 point. So there's still people out there that believe that. We will, of course, find out tomorrow. I think most people are going to be looking for guidance into the next year in terms of rate hikes or rate cuts going forward. Here's what you need to know. If we look at the S&P 500, the performance on all Fed days, look back to 1994 when they started announcing these rate cuts. That's as far back as we can go for data because that's when it started. If you look back at every single Fed announcement, take the stock market, add it all up and average it over all of those, I think it's like 105, you get a positive gain of 1/4%. It's 0.27%. We say this every Fed announcement, so it happens to be stuck right there in the head. So a slight bias to the upside there in Fed days there. Now, if you drill down further and you say, okay, what's the performance like on days where they hold rates? They don't cut, they don't raise, they just leave the rates where they're at. It's exactly the same. 0.27% to the upside is the average gain if you're looking at that. Now, Mr. Jerome Powell, he hasn't had quite the results as some of the other Fed presidents as well. Over the last 10 meetings, the stock market's actually averaged a slight decline, and it's getting worse each time, 0.2% to the downside. So thanks to Jerome Powell, he had his first 7 Fed days where he announced what he was going to do there, the markets finished negative. So he got off to a rough start there. I remember making a big deal out of that on the 8th try where he finally made it happen there. And if by chance you want to look at just the December rate announcements, so we're just breaking it all down for you. Holds, if they don't cut, or no matter what they do, what's the performance? If they hold the rates the same, what's the performance? And if you want to look back through only Decembers, so take every December rate cut since 1994, the average performance is a little bit better. It's 0.3%, and the markets are positive 60% of the time, so you got the odds leaning in your favor for tomorrow's Fed day. If you're interested, the April Fed day has the highest odds of a profitable day for the stock market at 75%. And June, my birth month, is the worst at 43%. So gives you a little bit of stats there. Lots of percentages just whipping right at you there. I hope you got a pen or something. You've been writing this down? I hope you're there. So I'll see if I can answer some question here for you, and then we'll just wrap it up from there. Quiet day for the market. I would assume you guys are pretty quiet here as well. Rob, the only one that thinks the market's going to tank if Mr. Trump gets impeached. I believe that started today. That is official, the impeachment process there. The odds of him, people are betting on the odds of him being actually out of office before the end of his term. It's only 15.2% chance there. So it's not looking likely in the meantime there. And if you follow the politics side of things, doesn't look like the strongest argument in my opinion. just taking a non-biased opinion there. David says, how or when do they halt trading a stock? You couldn't trade Corv all day because the FDA news, I believe. Well, there's a series of circuit breakers that they have. Yeah, that thing was halted for sure. A series of circuit breakers. Actually, I don't think it reopened. I don't think it reopened by the end of the day there. You now have a bid of 60 cents on that stock. So it's looking like it's going to open even lower tomorrow. So I hope it was probably a good thing you didn't get a chance to buy it there. Depending on the exchange, they have circuit breakers that start cool-off periods, and it starts at different percentage moves within a small window of time. Don't hold me to this. I believe it's like 5% within 15 minutes. If a stock falls that far, the stock gets halted for just a little bit, a couple minutes or so. If it continues to fall after that, there are different circuit breakers that continue to stop the stock until eventually it's just closed for the day, if it happens to be too close to the end of the day. But going back well now to 2008, they've been experimenting with that. And depending on the exchange, those are official rules. They are hard-coded in, and that would be why you see the stock halted. If you're going to mess with some of these biotech stocks like that, you want to know which exchange. They're usually on the NASDAQ. You want to look and see what those rules are, because these things whip around on news. It could also be halted pending news, but that's typically only after-hours trading from what I've seen. I don't know if that's a new rule or not, but we'll see. I'll have to look into it, because a lot of times Apple will be halted right before earnings, or Tesla gets halted, and that's just because we know there's a news event coming out. I know. Gosh, we all want the markets. This is like there was an article on China's Bloomberg or something. I watch them all. That said this is the most hated global rally ever in life, because we all hate that it's moving higher. Like everybody just wants it to fall, but it just won't fall. Oh man. Okay, cool. So let's see. You like Netflix here as a dip for a good short-term bounce? I would think it probably has a little bit more room to go. You'd want to see its performance when the markets have a down day, and I mean more than what you saw today. Like when the markets have a legitimate sort of, profit-taking or sell-off kind of a day, you want to see a day where Netflix holds after this drop that it's had. I think that'd be your first little sort of key from a technical perspective. Yep. NEO, I don't follow it. I'm sorry. Did they have earnings today? Probably not just yet, because I don't see much volatility there. I see some news on the number of vehicles they delivered. I don't see any news of earnings here just yet. If it was after hours, that might explain some things here on. No, I don't think it was after hours either, to be honest with you. So I don't see anything on that, but I don't follow it, to be fair. Yeah. Let me just see. One last little check here. If you don't know, NEO is the Chinese electric car maker. Nope, I don't see anything. I'm sorry. Maybe if I'm delayed here or something, then maybe that's it. So I will move on from that one there. Morton, Molivet, Sillery, S&P. Oh, you like the S&P 600 index? Okay. Hey, actually on Thursday, well, am I going to have that on Thursday? So on Thursday, the class that we're going to do, we're going to cover all the different sectors, areas, asset classes of the markets, going back like the last 15 years to show, like, all right, each year, what was the best performing area. I did this class back in June for customers, but like I said, it'll be open to you guys if you want to come along and comment and ask some questions and stuff. It'll be over there in the speakeasy, but it'll be 8 o'clock on Thursday evening. So I hope you'll join us for that. I love it. The pre-market, it was pre-market today? I'm sorry. Then I don't have the right news feed set up here. Because I see, no, I don't have anything for today. I'm sorry about that. I would have missed that one then. I didn't say, not much movement there though. So I guess that's good news. Up 2.25%, I guess. That's only 5 cents though. All right, I'll wrap it up there. did I cover everything here? We've got earnings on deck for tomorrow. I covered those. We covered the stocks here today. Stitch Fix was higher today. I think somebody mentioned that a while back. You guys were playing around with Stitch Fix. That stock was higher by 5% on the day. That helps you. And pre-market, yeah. I'll look into that NEO thing. And hey, hope to see you on Thursday. But we'll be back tomorrow to do the closing beat all over again. So we'll be here for you. Enjoy the rest of your day or evening. Thanks for watching. We'll see you then.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.